Welcome to our Grade 12 Accounting Channel YouTube handle, Excel Q5D, your home for Grade 12 accounting success. I'm going to do a few calculations from the Northwest Prelim paper for the year 2024. I received some questions. Explain these particular areas for us, so I've done this video to explain certain parts. I hope this will make sense for you. So I'm going to run through a couple of adjustments in this paper. In this paper, the way they did it was a bit interesting because there was no sales amount that was given, as well as this cost of sales was not given. And the examiner immediately gave us some financial indicators, which I want to emphasize on. Remember, it is not only the statement of financial position, which can be completed using financial indicators. Your statement of comprehensive income can as well be completed using your financial indicators. Your financial indicators must be integrated when you are preparing your statement of comprehensive income. So in this case, we're given the stock turnover rate, which is 3.17 times. And we were not given any other amount, so we had to use this stock turnover rate of 3.17 times to calculate our cost of sales first, and then we use the markup to come back now to our sales. Let's see how we would have done that. Okay, so let me see if I can quickly get my screen datas. So if I am given the stock turnover rate, remember, formulas for financial indicators are very important. If you have been following my videos, I keep emphasizing that you don't need to over-rely on the formula sheet. You need to know your financial indicators formulas right on your fingertips. It has to be there. It has to be quickly there, so that once you hear stock turnover rate, you can easily be able to do the calculation. So if you are going to do the stock turnover rate, the formula for the stock turnover rate is your cost of sales over your average stock. Okay? Your cost of sales over your average stock, and your answer must be in times. The answer therefore is in times. So in this case, we were not given the cost of sales. So your cost of sales, I'm just going to keep it as cost of sales over there. And for our average stock, we were given certain amounts in here on our trading stock. We're told that on the 1st of March 2023, that becomes the opening stock. So I'd come here, and then my opening stock is 450,000 over there, 450,000. Then I say plus my closing stock, which is my 550 over there. So I was given both my opening and my closing stock, and I know that this I have to multiply by 1/2 so that I can get my answer, which is given here to be 3.17 times over there. So it therefore means I'll come here and I will now say my cost of sales over, if I can say 450 plus 550. All right, let's just get a calculator so that we can see the figures nicely. So I'm going to say 450,000 over there. Then I'm going to add plus 550,000 like that. That's going to give us 1 million. I divide that by 2. That's going to give me 500,000. So it's going to be cost of sales over 500,000. Then it is equal to 3.17 times, like that. So for me to solve this, I will simply now say my 500,000. Then I'll simply multiply it by 3 point. So in other words, I'll simply say my 500,000 if I'm to get my cost of sales. I'll simply say 500,000 multiplied by 3.17 is equal to my cost of sales. So I'll say 500,000 here times 3.17. 3.17. That one is able to do with 3.17, and that will give me my cost of sales, which is 5 million. 585. 1,585. So okay, so let's get our answer book back, which is this one. So I'll come here on my cost of sales. I'll simply now say it is my 500,000, which is my average stock, then multiply by 3.17, which is going to give me my 1,585,000. That gives me my cost of sales. Once I have my cost of sales, which makes it easy now to get my sales. because I'd been told here that the markup is 60%, so I would then say this is 100. I would together, and therefore my sales would be 160 over there. So I'll now simply say what I want is 160 and what I have is 100. Multiply that by 1,585,000 like that. So let's get the adding machine again. There you are. Then I'm going to say multiply it by 160 over 100. And therefore that is going to give me 2,536,000. So at the top is going to be 2,536,000 like that. So immediately then I can get my gross profit if I simply say my sales minus my 1,585,000. Then I'll get my gross profit, which is 951,000 like that. Okay, so this was one of the adjustments which some of the lenders sent to me and said, Mr. Simmer, please help us to crack this one. It was a very interesting adjustment because they gave us the stock turnover rate, which means if I were an examiner, if I did not use the stock turnover rate, I might as well have used the stock holding period. Okay? And then I give you the stock holding period in days. And then you must then be able to calculate your cost of sales. Remember, in the stock holding period, you have cost of sales in there as well. So I would have given you such information, and then you'd have used the information to calculate cost of sales and get my sales. But there's several financial indicators which you can find on your formula sheet, which the examiner can use in completing your statement of comprehensive income. You can have K, that is number 1. You can also have that one as number 2. You can have that one as number 3. You can have that number 4. And you can have that one as number 5. And you can still have this one as number 6. These are some of the financial indicators, apart from the ones that I was speaking of right now, that the examiner can use in completing the statement of comprehensive income. Okay, so I'm going to go on and I'm going to do one more adjustment. One other interesting aspect about this particular question paper, it was a business that was trading at the same time. It was also offering services. If you read the first part, which I want to encourage you, in the 10 minutes reading time, use it effectively. Apply your mind, because it says the information relates to Ivory Cosmetics for the financial year ended 29 February. The business sells cosmetics. That's one aspect, the selling part. Would you get it? And provide treatments for customers. Now that's a service now. So that's why you find here we have fee income. It is very important that once you see the fee income, you need to relate it to an expense as well down there. Treatment expenses. Okay, now let's see the adjustment that they have here. It says, the following entries appeared. I'm doing adjustment number 2, okay? The following entries appeared in the February bank statement, but have not yet been processed in the books of the company. Bank charges 1.5. This one was an easy one, okay? So you'd simply come and add your bank charges, okay? So here we're just wasting time. I know you know this one. The second one now, a direct deposit by a client for treatments, 18,000. Half of these treatments will be done in March, so this is income received in advance. So that would mean I'll come where? To my fee income, and then I would say, of the 18,000 that I've received, I'll come in and I'll say, on the fee income, plus the income of 18,000, okay? But of that 18,000, half, which is 9,000, half, which is 9,000, it is for treatments which will be done in March. So I must come and say, minus the prepaid expense of 9,000. That one was an interesting adjustment that I thought you should really look into it as well. Okay, and another adjustment which is a very interesting adjustment as well has to do now with, that is adjustment number 6 here, which says, no entry was made for certain cosmetics taken from the stock for use in providing treatments to customers. Okay, so remember we are in the business of selling, but we're also providing a service, all right, treatments to our customers. So there are certain cosmetics which are taken from stock for use in providing treatments to customers. The mud selling price was 12,000. But we know that once we are taking it now from stock, we're not going to take it on the selling price. We're going to have to take it on cost. That simply means we're going to say multiply by 100. Remember, we mark up our goods at 60%. So that means I'm going to say multiply by 100 over 160, like that. Okay, let's see how much that is going to give us. So in other words, we will now say what we want is 100 and what we have is 160. Multiply that by the 12,000 and that's going to give us 7.5. Okay, so 7.5 is the cost of the stock that was taken, which was used for treatment. All right, so that simply means our treatment expense here has to increase now. So I'll come to my treatment expenses, then I'll say plus 7.5. But remember, it will also affect your trading stock. It will also affect your trading stock because you have to go and say minus 7.5 on your inventory, minus 7.5 on your inventory, and then on your treatment expenses, you say plus 7.5. That was another adjustment that I thought, you know what, let me just quickly run through it apart from the first one, which was sent to me on my inbox. Okay, so before I end this video again, there's another interesting one, number 5. Number 5 reads, consumable stores on hand comprise packing materials. The bookkeeper neglected to process the reversal at the beginning of the financial year. Okay, so when we talk about reversal in simple words, we're saying we had closing stock last year, which we did not record in this current year. Okay, that's what it means in simple words. So we're packing materials on hand as per physical store count at the end of the current year, which is 10,000. Okay, so if I take you back to cost accounting, if I can just take you back quickly to cost accounting, you remember when you're doing direct material cost, you always say opening stock plus purchases minus closing stock. It's the same thing that we're having here, where you have to now go and say how much is the consumable stores on hand at the beginning, one much. So you will come here to your packing materials, which is your or rather we have to go to our consumables. Yes, that is the packing materials. So I'll come here to my packing materials and then I'll now say what was the opening stock? 15,000. So I will say to the 20,000, which is my purchases, I have to come and say plus 15,000. Now I have done the reversal. I have done this reversal. I have taken the closing stock from the previous year and I've added it to my purchases for this year. But I don't end there. I have to come and subtract the closing stock for this year, which is 10,000 here. Then I'll come and say minus 10,000. So this was the last interesting adjustment. I'm not going to do the depreciation and the loss and sell of an asset. Right, I'm going to focus on something else. I've done several short videos on these particular adjustments. Okay, so until next time, enjoy your studies. Remember, time is no longer on our side. Cheers and goodbye. So, hit that subscribe button, turn on the bell, and start your journey to accounting excellence today with Excel Q5D. Grade 12, Accounting Simplified. Learn smart. Revise fast. Excel always.